December 2nd. We're going to take a look at the economic calendar, see what we have going on this week, review currencies, review stocks, some options positions, review crypto, and let's dive into this week's trading. So I'm still traveling until Monday afternoon, but I'll be back for the trading rooms Tuesday, Wednesday, Thursday for Flex, Tuesday, Wednesday, Thursday, Friday for Equities On Demand. And we'll also wrap up with a bonus session on Friday for non-farm payroll, which comes out this week, kick off the new month. So let's dive right into that first. Let's take a look at the economic calendar for this week. Going into the high impact news events, Tuesday the 29th, we have CAD GDP. We have 10 a.m. Bank of England, Governor Bailey speaking, consumer confidence out of the U.S. That's Tuesday morning. Wednesday, U.S. ADP numbers. That's the precursor to non-farm. That's Wednesday, 8:15, 8:30 a.m. respectively. We have Jolt job openings, which is going to be a big number. We have Fed Chair Jerome Powell speaking on Wednesday afternoon. We have CPI for the Swiss on Thursday, which would be interesting. And then Friday, a double whammy. Don't forget the ISM, 10 a.m. on Thursday. We have here on Friday a double whammy of employment news. We have the CAD employment and U.S. employment on Friday morning. So like I said, I'll start a bonus session for the Pulver Report on Friday, December 2nd. We'll do it at 8:30 a.m. and just jump right into the news and see if we can grab some pips around those CAD crosses and dollar pairs. I'll just do that on the YouTube channel. That's youtube.com/Chris Pulver. All right, reviewing everything from last week. We, in fact, did have a holiday rally a little bit. So we just broke the highs. We're above the 200 daily EMA on the SPY. Going into this next week, it's going to be interesting to see if this will continue to run higher. Earnings season is essentially a full wrap, and I would say that we had some pleasant surprises on the retail side. Amazon's reporting some really big numbers in their online sales, despite kind of the expected slowdown. So consumers be shopping, so that's a good thing, and we're going to see if this is sustainable, or perhaps we might be hitting that resistance very near term. I'm looking to wrap up profits, this week, next week. I'm trying to get as many profits locked in prior to the Fed rate decision on December 14th, just in case the market's going to kind of squander the gains we've seen since this low in October. So that being said, in the stock and options side, I do have some positions that I need to be looking to reallocate some covered calls to. So CLF, for example, I have a $16 covered call. It closed on Friday at $15.70, so I'll get right into the market on Monday morning and start covering. I also will be looking at Kraft Heinz. I had this one covered at $40. It's trading at $38.90, so I'm going to get back in and cover that Monday morning. I have a Snap covered call at 11, and Snapchat's trading at 10.18, so I'll get in and cover that as well. NCLH, this one, I believe I covered this and it got called away at $15, but I will double check that. We have a couple more. Let's see here. Alcoa, that was another big one that I was looking to lose this last week. So I had a $49 covered call and it was $47.89 close on Friday. So the good thing is all these are relatively close to my levels. So I'll look to get back in probably at a $48 or $49 covered call on Alcoa. Maybe lower the cost by the week by another 50 cents to $1, hopefully, depending on the premium. And that'll be what I'm doing for Equities On Demand. It's just more management for this week, taking some expirations out to probably the 2nd or the 9th. Really looking, like I said, to protect as much profit as possible before the 14th, which is going to be Wednesday the 14th for the Fed rate decision. So anything I can do to protect profit, get some stocks called away, that's a good thing. Free up some cash and capital. That's my agenda. And then we go into currency strength. We had a nice little JPY stronger move last week to end the week. We had a weaker US dollar. This would have been a little bit of, a quiet day on Friday's trading. This is what I'm reading here from the currency strength chart. We go into this new week of trading. Hopefully we see more dollar weakness. So let me type in US dollar and DXY. So we're right back down to these lows. We do have this 200 EMA. It would be excellent, actually, to see the week kick off with another wave of dollar weakness. So the DXY, we're looking to revisit lows, hopefully, and maybe poke a little bit lower. The US dollar hitting that 200 EMA. Hopefully that will drop another, roughly another 75 points or so on that dollar index. Euro dollar's already hit the 200 EMA. We're going to see if we can poke these highs around 105. The pound US dollar, we broke the highs actually at 120. We had highs around 120, 160. We are right up to that 200 EMA. So traders that were with me this week, we were talking about going long on pound US dollar, going after that 200 EMA, and in fact hit it. If you go to the New Zealand US dollar, same thing. New Zealand US dollar hit the 200 EMA, so nice little scalp for the week. The Aussie US dollar still has a little bit of room, but we're back up near the highs. So perhaps another continuation to the upside towards this 200 EMA. And then also the dollar yen Looking for this to revisit the lows and hopefully hit this 200 EMA around 135. So I have a nice little profit window down here on the dollar yen. Even if we have another pullback, this might just be a little pause on the dollar yen before it flushes lower. But there's an interesting correlation watching the US 2-year. So O2Y. So the 2-year, if we have this high, low, lower high, lower low, if we can get the 2-year to break through this 50 EMA and start to head lower, that still sets up for this potential holiday rally. Now, it might be counterintuitive. You know, everyone that's talking about this is a bear market rally. The market's going to tighten up once again and blah, 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 because the Fed's going to keep raising rates. Look, I get it. But it could be a counterintuitive rally where the market is just so desperate to see the market rally kind of save itself in Q4. If that is the case, then we'll see the two-year yield probably dip back down to fresh lows below 4.25. If we can break this 50 EMA, that gets us down to about 4%. And, lower highs in yields will likely mean higher highs in equities. So there is still some potential for the S&P to rally. Okay, so 405 to 410 is where I'm really looking to protect. We might come back and challenge these levels at 420 to 425. But I'm cautiously bullish on this whole situation, just in case the market turns sour once again and we price in another compression. But I do think that earnings probably surprised for the most part because they held fairly steady, and retail had some pleasant surprises last week. We go into the Qs. The Qs have not poked the highs, which is around 293 for the QQQ versus what I just showed on the SPY, right? You see the SPY broke the highs, the Q did not. One thing I also noted last week, we're at 20.51. Now, there's been an interesting correlation this year. If you were to sell the SPY when the VIX gets below 20, and you were to buy the SPY when it gets above 30, that strategy alone this year for 2022 has produced over 25% gains. So part of me is also aware that we had the VIX lows here around 1930. We had VIX lows back here. Again, this is all in 2022, so this is August lows of the VIX. This is March lows, or March lows for the VIX. We have $19 and $19.40 or so respectively. So I get it. Like a tap below here at $20, I would be looking to protect profits just in case this starts to go higher, because a move higher on the VIX is likely going to lead to a drop in some of the indices and likely the SPY. So there is a little bit more downside, so I'll be watching that. Chart alarm is set. I'll set one down here at this 1940 level as well. So 1940, just to see where those lows were. Those were lows back in August. So lows back in August, lows back in March, and I'll be watching the VIX. Currency-wise this week, if we have our dollar yen moving its way down to some fresh lows, I'm still targeting that 200 EMA. We have Swiss news this week, so I'll be watching the Euro Swiss. We're still getting a lot of indecision, but I'm still very bullish on this longer term towards this 102.50 to 103.50 pocket. So that's a big currency pair that I'm watching and waiting for. The pound Swiss has made a pretty decent run, and we can see some highs back here in October. We have a 200 EMA around 1620. I'm still going after this larger outer trend line between 1.20, 1.21. And again, this could be putting in a massive low off of 30-year lows. All right, so this is around 101 where we had our flash crash on the pound back in September. We've recovered off that nicely if this is going to continue to push higher. The big breakdown point was back here around 1.20, so that's going to be my destination for profits if I'm going long pound Swiss. We've had a really good session the last few weeks in Masterflex. I'm looking forward to continuing our sessions on Friday. I know the traders have been super active in the chat and posting all sorts of test results, posting all sorts of great results in the live market. So keep up that great work, keep up that engagement. The community is growing and everyone's really excited about that. So that's awesome. And that's about it. So I just wanted to give a quick update on where things are at. It's going to be a busy week, Tuesday, Wednesday, Thursday, Friday in the trading rooms. I just need another day for travel on Monday. But that's it. We're going to see what the holidays give us. Hopefully we can get to some nice profits protected prior to the Fed on the 14th to be very definitive in case they want to kind of squash this momentum going into the last couple of weeks of the year. But like I said, counterintuitive rally is very possible. The market's kind of been desperately wanting to see some rally. We will also have some inflation data at some point in the month of December. And one thing we can watch for would be this year-over-year inflation rate, which when it came down to 7.7, we're going to see again if it prints substantially lower. So perhaps we have another print that it's, 7.2, 7%, something like that, where the market gets again excited that we are facing peak inflation. Things are coming back down. We're getting compressions. If employment numbers are higher, that's probably a good thing for the Fed to not necessarily tighten as much. If we go into the Fed watch tool really quickly to wrap things up, Probability is December 14th, the rate will be a 50 basis points hike. So that is right here. We're currently sitting at 3.75 to 4%. This would give us that 50 basis points right here for December 14th. 50 basis points will go to February. Another 50 basis points is expected to go into March. Possibly a 25 basis points hike into March, and then May. Right now looks like we're going to have the pause. So we potentially cut 0.25%, or we actually raise another 0.25% in May. But that is where the pause is at. We'll just dissect the language from the Fed in December, but as long as there's some quietness over the next couple of weeks, that's a good thing for these rallies. We'll watch the VIX and see the correlations. I think it's really important to protect your profits, have cash, have margin at the ready, and just be ready to take really good setups. All right, so I hope everyone had a great Thanksgiving and a great holiday weekend. I'll be back in the office on Tuesdays and continuing on with the trading room sessions. Appreciate everybody being here. Like and subscribe to the channel for YouTube, and see you all in the trading rooms this week. All right, take care. Talk to you soon. Bye.